What a crazy week. We had a bad CPI reading on Wednesday, which tanked the markets. And this morning, futures for Dow futures were down like 200 points. And then PPI data came out, and it was slightly tamer than expected. And the market shot up immediately. I've taken quite a few trades this week. I think like just in the last 2 days, around 7 or 8 trades, all bearish trades. So I thought I'll put on the brakes on my trading today because tomorrow we have another crazy day with all the big banks, JPM, Wells Fargo, Citi, BlackRock, all these financial institutions reporting earnings. So that will definitely move the markets. So I thought I'll take a break today, and I'll be traveling for the next 4 days. So there will be no more videos until I come back. But I thought I'll give you a quick update on the what's happening in the markets. So this is a screenshot of my Discord server, and this morning I posted this. Yesterday I posted this video. This is on YouTube, so if you haven't watched it, watch that. And this is about the CPI after the CPI information came out. But this morning, PPI came out, and I've summarized all the PPI data, but the essence of it is that it's lower than expected. And that was positive news for the market because CPI, PPI, all of this feeds into the PCE data, which actually the Fed really cares about. They mostly pay attention to PCE. That's their preferred inflation gauge. So all this data that keeps coming out will eventually show up in PCE. So when we saw CPI data yesterday, it was really bad. Bad in the sense that we are seeing a trend of sticky inflation for the last 3 or 4 readings. But then PCE came out slightly lower than expected, so the PCE will not be as bad. So that was good news, but the rally fizzled out really quick. And in fact, I was thinking that I will not take any trades today. I did take another trade today, and now I'll wait for tomorrow. All right, now for the interesting part. Let's look at some charts. So this is DIA, Dow Jones ETF. And if you saw my quick video update yesterday, I had pointed out that the 8-day EMA, the blue line, has finally crossed below the 34-day EMA. You could use any other EMA crossover like 10, 20, 30. I'm using 8, 21, 34 crossover. Same information. So DIA is telling us that the sentiment has shifted. So the markets are now beginning a pullback. I don't know if a correction will happen because, like I mentioned yesterday, for a correction to happen, all 3 indices, Dow Jones, SPY, and NASDAQ, they need to drop together. So only then we'll get a full-blown correction, which is like 10% or more. And we have banks reporting earnings. It's a huge binary event. So if the banks report good earnings, all this will become a buy the dip event, which will be very sad because I've been waiting for a correction for months now. So I'm hoping that the banks do not throw a wrench into my plans. But if banks report bad earnings tomorrow, if Netflix reports any kind of earning miss or weak forward guidance, that's what it will take for us to get a full-blown correction. That's when we will see SPY and QQQ follow Dow Jones. Dow Jones is just 30 stocks. So SPY is the main guy here. If you look at SPY, you will notice that it's barely scratching. The 8-day EMA is barely scratching the 21-day EMA. So yes, we are getting a small dip, but it's not significant enough. You can't assume that we are going into a correction here. Dow Jones is the weakest of them all, but SPY, and I don't think SPY will show us anything until we get Netflix earnings next week. And bank earnings will also have an effect on it. QQQ, so no clear signs here. VIX is looking very interesting because look at this. I've been saying for months now that for us to get a correction, VIX needs to trade above that 15 level and stay there for a week. It's been like what, 2 days now? It's been a few days now that VIX has been flirting with these levels. So VIX is definitely showing signs of fear in the market. And when there is fear in the market, money leaves the market because market participants become conservative. It's really simple explanation of what VIX tells you about the markets. Okay. Another interesting thing I want to point out is right now SPY is not showing us any signs of a pullback. But if we do get a pullback, I've been using Fibonacci retracements in my market outlooks to show you how far can the markets fall. So one way of using Fibonacci retracement tool is, let me choose that tool. You take the bottom of the current move and the top, and it will draw all these lines for you. So you could start from here, 409 on SPY all the way up here, and it will show you what it thinks are the retracement levels. So 3850, 61.8. These are three important levels. Mostly 50 and 61.8 are the are considered very important, but because this has been such a strong bull run, it's hard to imagine that markets can fall that much. So I'm anticipating that 38.2 is the max. We'll get a pullback and then markets will get a bounce from there. Now, if you look at this bull run for the last 5 months, it's you may ask me, like, why are you going back to this low? This is like history now, right? So you could, if you want to be conservative, what you could do is, let me remove this. Take the last low on January 5th. So let's take that last noticeable low. Okay. So you start from here and you plot a line to the top. And that might give you a more conservative estimate of how far markets can drop. So SPY is at 513. Really conservative price target would be 502. Okay. And if you want to use Fibonacci retracements, the 50 and 61.8% retracement levels, then I have a feeling 495 is a good level where we can get a bounce. So I will keep updating these numbers as the week progresses, and next week is very important because we are running into earnings season. Now, if you look at the overall markets, right? If you look at S&P 500, I mean, Thinkorswim has this feature of visualizing how the markets are doing. Finviz.com is another website. If you don't have Thinkorswim, it gives you this heat map of the markets. But if you look at this, you can clearly see why SPY and NASDAQ haven't dropped and Dow Jones has dropped so much, because of the market leaders. Microsoft, Nvidia, Broadcom, Apple, Oracle, Google, all these companies, Amazon, they're still green. So even after this massive drop in Dow Jones, the leaders, the tech leaders, are still green. And if you just, this is just a high level visualization. If you pull up the charts real quick, let's look at Apple, and I'm going to switch to my regular indicators here. So Apple and Tesla are the only ones which are weak. Apple has been dropping since the beginning of the year. No surprises there. Amazon, look at this. Like not even a pullback. Google, nothing. Meta, nothing. Microsoft, nothing. Netflix. So you see, so they're not calling them the Magnificent Seven. They're calling them the not famous four. They keep changing these. They keep changing their terminology. Favorite four, I can't remember. So something like that. It's four stocks now. So they're all up. Nvidia, I'm scared of touching Nvidia, frankly speaking, because this is a meme stock now. It's the leader of the AI bubble, and I'm like not touching this unless we get a earnings miss in Nvidia. I'm not touching this stock because it's extremely volatile. Even if it drops, you saw this bearish candle on this day on 3.7, immediately reverse back. So not touching that. I did take a trade on MU, which is semiconductor stock, Micron Technology. But all these semis, they follow Nvidia. So today Nvidia is slightly green, and I don't know if this downtrend will continue, but all semis will follow Nvidia. Tesla, one of the weakest, and Apple, one of the weakest. Yet the Nasdaq continues to go up. So that's the update for today. I'll not be putting out any videos this weekend because I'm traveling until Tuesday. Tuesday is when I come back, and then I'll start putting out more videos next week.